What do you think, Doug?
Happy Friday. We are live coming to you from beautiful Indiana, home of, would you say this is Peyton Manning's home? Or do you think he claims Louisiana or wherever, or Tennessee,
A
or,
volunteer.
I think we would claim him.
Yeah, I think Manning would be a good person. How about AJ Foyt?
AJ Foyt, home of the Ball brothers.
Oh,
How about the Ball brothers?
yeah. I studied them last year when I was bored.
Did you really?
Yeah, I think they moved from New York to Muncie, Indiana.
That's right. And so if you're watching playoff basketball, which I really don't, but one of my sons does, the Denver Nuggets are in it. And
that's no joke.
No, and the Denver Nuggets are playing, it's called like Ball Court or Ball Arena. And I was so excited to see the Ball logo on the NBA Finals court. That just made my day the other day. And so go Muncie. You left your mark. You're leaving your mark worldwide. And yeah, Indiana, home to a lot of great people.
How about saying farewell to our disclaimer? I said shop wisely. Phil was pointing out to us earlier that there's a bargain on New York strips here in Carmel. If you need more information, call Phil. Shopping wisely will make your budget work better, and otherwise it's rough out there for budgets.
For some of you, depending on how you operate it as a husband and wife team, I would say on the disclaimer for some of you, don't shop. And then for others of you, I would encourage you to go shop. And so depending on where you're at on the spectrum, shopping wisely could mean something very different to you and your family.
And well, let's you got a big book there in front of you, Doug. Let's kick off with that. What's that all about?
Okay, well, so Gimbal has been really fortunate. We've had tremendous influencers invest in us over the years. And one of those influencers was William O'Neill. And William O'Neill, Bill O'Neill, if you Google him, he would be one of the best Wall Street stock guys of all times. And and so this big book I have is it is a big book. Look at this thing. Okay, yes, I hit my mic. And what this is, you guys are all familiar with this book. Check it out. So what this is this is a book of, does that look familiar? This is the stuff we look at every week with you all when we're studying the stock market. And this book is full of what happened in December or in 2019. So all of these stock charts here are from examples in 2019 and historical examples of winners and losers. And what this was a seminar that Keith and I went to just before the pandemic. And it's hard to believe it was that long ago.
Right.
But I believe this was the last master's trading program that the O'Neill company did.
Yeah, they said it was going to be their last, right?
Yeah. And so I have been to 3. Have you been to more than 3?
Probably have. I don't know for sure.
Yeah. And so a lot of great people have poured into us over the years to help us learn and become knowledgeable on investing, especially using stock charts. And William O'Neill was one, and he passed away on what's that? Sunday?
Yeah.
But the question I had for you, Keith, and is you and I talked a little bit about O'Neill on Tuesday morning, but I wondered, how did you come across O'Neill? Like, well, I meant to text you this.
Yeah,
but how did you come across?
Let me get some of my props out of the way here. Like, I started, because I think so highly, I didn't even tell you this. I started whenever I'm in a half-price books, I go try to find his book to build an inventory to give away to whoever has an interest. Because if you're going to study stocks, I think his book, How to Make Money in Stocks, is really the only thing you need to start with, and it'll kick you off. And so we do have those here. O'Neill also published thing called the Investors Business Daily, yeah, here it is. This one's 9/11. He changed. Oh no, it was called the Investors Daily. Here we go. That's what it was called, the Investors Daily. Back in this is back in 1987. So this is the edition of the crash in 1987. This was the edition of 9/11, where they changed the name to the Business Daily. They went from Investors Daily to trying to compete, I think, with the Wall Street Journal or Business Week or things like that. They ultimately got bought out by the Wall Street Journal. There was a fellow, like, to become a stockbroker, and that's what's really cool about that, is that word. I don't think there's too many individuals that help other individuals and actually use stocks anymore. It's all mutual funds and ETFs, and we're slow to put them in your portfolios for a lot of reasons, but you will see them there. But this fella Fred and this older broker Arnold would go to lunch every day, and Fred was a customer. Arnold was just an old, I don't know what you would call him, just he walked. He actually, I think, was only 3 years older than I am now, and he walked around with a cane, which is just mind-boggling. And he had a crooked finger, and he'd wag it at me because I would have been like 25 and didn't know anything. These old guys were taking care of me. And Fred started talking about this thing called Can Slim, which is on the front of your that's right here. And when I didn't know what that meant, and so I started really considering it, looking, subscribing to O'Neill's stuff. I didn't have any money. I didn't have enough money for rent sometimes. And so the introduction came from Fred. Fred was just a sweet fellow. He died too young, but he just was a kind man. He loved me so much that when I bought my 1989 Bonneville, Fred went out and bought one. He bought the exact same one. And so, but I think he would take the bus downtown when I work downtown, and I would drive Fred back to the Butler area. And then William O'Neill was on some show that Fred had. I couldn't afford cable TV. And so we would literally sit in his living room. Whenever this was on, I'd sit in his living room with him and watch William O'Neill. And it was just a really kind of cool season in life. I mean, I didn't, unfortunately for you all, I didn't get as much time to immerse myself really till the last 5 years or so, but I think it's a big deal.
It is a big deal. It's really the foundation to how we manage money today. And I can remember the first time I went with you and Jim, and I believe Henry, to Santa Monica to one of these conferences. I can remember sitting in there just feeling so cool to be there with all these big shots and investment guys and gals that I didn't have a clue what they were talking about. And they would show the charts, and I think, what does that mean? This isn't anything like the mutual fund wholesaler told me about. What are we doing here? How would we ever apply this to client money? And it's just been a lifelong education, Keith, and I owe it to you. Because how would have I known this stuff? I wouldn't have. How would you guys know this stuff unless someone tells you? And so I'm very grateful for William O'Neill. And even a couple of years ago, he had been battling some dementia.
Right.
And Keith and I went out to the conference, and that was clear.
Yeah.
But I can remember at that time just thinking with such a grateful heart that I have for him. And it wasn't long after I wrote a little obituary for him.
Oh, wow.
Yeah.
Wow.
And because he really meant so much to me. And there's been a couple other guys too. We have a friend, Brian, who's invested a lot in us, a friend, Patrick, a friend, Mark, a friend, Ron. I mean, we've had some significant David, we've had some significant investments in how we manage money for you all, and it's with great joy and adventure that we do it.
It is. I think I don't know if I've said this out loud to you, Doug, but like one of the things as a young businessman, when I came out of graduate school, aggressive as all get out, one of the things that just always banged in the back of my head to help guide my decisions was what is the motive for me to do this? And what's the motive of the other person coming at me? if somebody's trying to get me, what's their true motive? And I think capitalism can provide the most genuine relationships that you don't get from socialism or communism or whatever else, because in a true capitalistic situation, I think the supplier has to love the consumer, and the consumer has to love at some level, like, appreciate the supplier. And I, for the life of me, couldn't figure out why this man, William O'Neill, would take what he had poured hundreds and thousands of hours and dollars into and literally give it away in the form of a book. You can get this book, at least I did, for $6.50.
Well, and he would tour the country,
Right, right. And
giving seminars and training other people to give seminars. His effect on teaching, he's a master teacher.
I didn't care for that seminar when they let us I think they let us kind of say goodbye to William O'Neill.
I think that's what it was.
Yeah, and the more I think about it, it created a lot of thoughts in my head, because his daughter and his son were sitting there with him, and I thought, maybe incorrectly, that doing all that traveling, he might have missed out on some of that, but they were literally in that picture with us, his daughter and his son. And I was compelled after that trip to send his son, who was running the business, then a letter and just thank him for what all he did and what his dad's done.
That's so cool. He's inspired a lot of great people. And one of the, in 2019, one of those great people is this guy, Mike.
Oh yeah.
And
I love that dude.
I do too. And during the pandemic, shortly after he made a change, and so, but there for a while, we would spend Zoom calls with Mike.
Right, right.
And I have so many lessons learned from Mike. Who's Mike? Mike was a portfolio manager who shared an office with William O'Neill. Now he's sharing his information with people. And so it just keeps going. And that's probably another byproduct of capitalism, is being willing to share your stuff for the benefit of somebody else.
Yeah, there's an old philosopher, he said, if you want to find your life, you give it away. And that's the same idea, is that the more that you find of value in life, the more you give it away, the more you find what life's really about.
Yeah. Yeah.
Well, thank you, Mr. O'Neill. I am really grateful for the influence that you had, and thanks to David Ryan, who really, I think, carries on that legacy in a really pretty profound way. I think Ryan was his first kind of protege. That he's probably about my age, I'd say.
He is. Yeah. Yeah. I didn't mention him, but yeah. I keep a list of lessons learned on a Google Doc, and a lot of those lessons learned have a DR right next to him.
He's a smart dude. He's a kind and really loving man.
He showed up to this meeting in a Prius.
I didn't even notice that.
Well, I noticed.
Oh, it was his
I
son's,
noticed
though, I
stupid
think.
things like, well, even there,
Yeah.
I mean, like, I was just so impressed that he rolled up in a Prius. He could have rolled up in a Maybach or a Ferrari.
Yeah, he lives on one of those cliffs in Malibu, and who knows, like when the fires were going on, he'd already bought like this massive generator for, like O'Neill made people wealthy, like amazingly so. Well, his lessons helped them do that. They had to do it themselves.
They had to do it themselves. That's exactly
Well, what do you want to talk about? We've celebrated Mr. O'Neill pretty well here.
Well, it'd be honoring to just go right into the market. It's what we do. I know we come at you guys with the same stuff every day. This is like the checklist, the pre-flight checklist that Keith and I go through every day, just looking at the stock market.
Looks is the NASDAQ. This is really the leader in the market, and that's for what we've got invested for clients. Wouldn't you say it's more heavily biased in this direction right now?
Yeah, it's been inching that way. I've taken some profits along the way too. If you would, this is a daily chart, and so this is going to capture. There we go. This is now we switch to a weekly chart, and Keith, hover over. You're probably thinking where I'm going.
I'm just going to draw a line, right? Well, not a very good one. Let me do this again.
That works. He's connecting
I'll
recent
just do
high
it
here.
right here. I don't know what's going on with this pen. there's where the line is. We're coming up against that resistance right there is what I think.
Yeah, and even go back, do you see the 16,212? That's
High.
that was the high. And it's interesting. We're tempted to gauge the success or lack thereof on a 12-month calendar, aren't we?
Yeah.
And I think the mutual fund industry has conditioned us to think that way. There's 12-month, there's 3-month, there's 5-month. And I was on a call recently with a mutual fund company, and they were talking about their 3-year track record was coming up, and they were so excited that their 3-year track record was coming up. Why were they excited? Because the big institutions like the and nothing against these guys, but I'll just name them, like the big ones, like a Merrill Lynch or UBS or whatever, or Morgan Stanley. You know, they have certain rules and guidelines, and they can't invest any client money in stuff that doesn't have certain rules and guidelines. One of those is 3-year track record. And so, like, if you look back over these calendar years and say, well, how has it done last 12 months? How has it done last 3 years? It really doesn't tell you the picture. What tells you the picture is what's the price doing? Are people buying this thing? Are they selling this thing? And that's what we look at when we look at these charts. Yes, it's a picture of time, but what is the picture of? It's a price and it's a volume. That's it.
And if you look at time, it can mislead you, misdirect you, cause different ideas as well. Like, so like if you look at what's going on here, the S&P 500, you're thinking, well, we've had a good rally since year end, right? So we're over here, but just looking at, my goodness, we're not even where we were a year ago, nowhere from where we were 18 months ago. And so this market is really, it's trending upward right now, but it's not doing with a lot of conviction, do you think?
Yeah, I was looking at May results. It was interesting. Our friend Mark put out a nice summary of May results. He said the NASDAQ really led out, and it led with mega caps. Mega caps are the ones you all know of. You know, like the phone in your pocket is probably the brand of that is a mega cap. And so it's these big, huge brands. And the NASDAQ was up nearly 6% in May. The Dow Jones was down 3.5%. I like to see that divergence. That tells me that the market is battling for ideas, battling for companies that are making money. And amongst those, I'll show this chart sometimes. Keith has a proprietary chart, but the S&P 500 stocks above the 200-day moving average were, you know, less than 40% at the close of May. And so that's not a whole lot of conviction in the movements. Just, you know, the main reason the S&P or the NASDAQ had done well is just those big, humongous mega cap type stocks.
That's what this chart is that I put up here for y'all to look at too. Is this? I'm following how many are in this database, and then right now there's 9,694 stocks in this database, and 5,000 of them are still below their 200-day moving average, 49.94 below their 50-day, and just with the strength we've seen during May, it pushed some of these in the shorter term above them, but we're still 50-50, and we've talked about in past weeks where all three of these are, you know, not yellow by being underwater. Then there's a lot more strength in that market. So that's where we're at on it today, and we're very hopeful that we'll see some buy-in coming into the market. And I
like the way the market's looking, really. I mean, I'm optimistic about it for the reason that when I say the market, like the NASDAQ, it's been looking good, and there's a lot to like about it. We can nitpick and say, well, we need to see more momentum of stocks underneath. I get that, but it has been good to see it up.
Yeah.
So,
well, it's up depending on where you are. Like if you're swimming in this pool, you're still, this is the small cap, so this would be worth you looking at your portfolio. If you're swimming in this one, you're really going back to the all-time lows of this bear market. That's small caps, the mid caps have seen it. And so what I like is when you start seeing a broader participation, because when you go from these mega caps that are in the NASDAQ or the S&P 100, those big cap stocks, it shows that there's not as much risk going on, where you're not going to see as much of bang for your buck. But right now we do, like you said, Doug, this is, if you're in the right pool, it's all right now. And that, I think O'Neill helped us to be able to say, you know what, we're in the wrong pool. Let's get out of this one and over to that one. And so we don't really have small caps in the portfolios right now.
Another, this is industry speak, I'm about ready to say, but the S&P 500 has 11 sectors. Okay, so that's 11 sleeves that make up the S&P 500. And one of those sleeves could be a healthcare, it could be technology, could be financials. And Keith, I know you do this too, but I made a list on Monday morning. Oh, nice. I made a list on Monday morning of all these different ETFs I was looking at, and like all of them are in one space.
Really?
Take a guess.
Technology.
Yes, technology. And so that explains, to Keith's point, why the NASDAQ has been looking so good, because it's heavily weighted in technology. And what O'Neill has taught us is it's okay to invest in those areas that are gaining traction. And coming out of school or even studying the CFP, taking the CFP, it says, hey, sprinkle this stuff out amongst that color wheel that Keith just showed. Sprinkle it out everywhere, and then you'll be fine. And you won't have too much risk in one certain area. Well, we think cash can be a great place. Instead of having to sprinkle it everywhere, maybe look for some winners, and the rest just use some money market.
Well, and even if you were doing what those training things said to do, Doug, they would have said, buy the small cap one that I've got on the screen because it's on sale, right?
Yeah.
Well, it's been on sale for a year.
Yep.
So that time value of money is another thing O'Neill taught us, is that if you're sitting there waiting and it's not doing anything, you're wasting your capital, you're wasting your time. And this thing, in order for it to do something, this is the 50-day moving average. This is the 200-day moving average. It's got to have the shorter term trend back above the 200-day, and there's no reason to be over there swimming around and putting your capital at risk. And so a lot of times those old ways of thinking would say, we'll just buy and be patient. And sometimes patience can wear you out, you know.
Oh yeah, that can have effects on your psychology and your bottom line.
Let me look at something here and see what this looked like. This was a big winner last year, the energy sector. But if I change this, well, I'll just put it on a weekly here for everybody. So this is 2020. And over here in 2018, if I connect the trends here, it's trending downward. And it went from whatever this is over here in probably September of 2018. Then it got hammered with the COVID sell-off. And that trend line really just kept going out here. Probably let me reset that. My guess is if we just connected this to there. Oh, it's so annoying.
You must have some lithium batteries in there.
It's doing something. Yeah, if we would connect that, we really could have waited till over here to get into that thing, and it would have done wonderfully. And so we can go back to this small cap, look at it on a weekly basis and say, probably we just cut across there. We probably don't need to worry about that one until it can break that trend line.
It's on the radar, and I'd like to look at it every week. But for now, it kind of tells the picture.
We'll go fishing otherwise.
Yeah.
So I don't, I haven't railed on our federal government or state or local yet today, but I have a question. How much, if I gave you $1 trillion a second?
Sounds good.
Not a trillion. I gave you a dollar a second.
Okay.
How long would it be until I gave you the $1 trillion?
This is one of these mind-blowing things. I don't know if I'd have to be like as old as Noah or what.
No, you would have to be older. It'd be 31,688 years to give you a dollar a second. And I tell you that because I don't think anybody knows what $1 trillion is, right?
No, You can't even imagine it.
Yeah, and so the way that our government is talking about a trillion, it's demoralizing because it tells me they don't value a dollar. Like $1 isn't sufficient. We need to talk about a trillion. But to give you another picture of a trillion, Apple, Microsoft, Google, and Amazon are all what they would say part of the $1 trillion club. They, when I wrote this down, they had a market capitalization of the four of those almost $8 trillion. And that's so what the government's talking about spending is the value of those companies. And we added another one this week. I don't know if you saw that. NVIDIA is the newest team member in the trillion market. But so if anybody's talking about the craziness of the money they're spending, you can use those names: NVIDIA, Apple, Microsoft, Google, and Amazon. Each one of those are roughly $8 trillion. Maybe, Apple might be a little bit more, but that's what you're tossing around when you use the word a trillion in the economic scheme of things. It's something as big as that.
And that's also the only way we're going to get out of the debt scene, is if we create environments for companies to thrive like these companies have, to create products, to create environments, to better families' lives. I mean, that's the only way out right there.
And it's a big deal. Creativity, ingenuity, initiative, all those things are why people swim through rivers. They try everything they can to get into the United States, because we offer people that possibility.
Yeah.
That's the I think O'Neill said it's the goose that lays the golden egg. It's the thing that allows people to create opportunities and possibilities for others. What's your possibility for the weekend look like, Doug?
Well, I picked up on something from a group of friends of mine that I meet with on a regular basis, and they suggested this weekend look like this: that you aim for the core of what your family's about. So as an example, our youngest is 10, and if I said, hey, what are you about today? It'd be about playing FIFA on Xbox. And so if I play one game of FIFA on Xbox, check, that just hit what he's about. And so I'm just going to aim for the hearts of the people I love. That's really one of the best influences I have.
Well, I'm going to do likewise. I'm taking Connie on a couple dates, probably just spending some time with her. The next weekend, we're getting Caleb married, so I'll be spreading my thoughts on a lot of things for that. But this weekend, I'm going to have a date with my bride.
Yeah, very cool. Well, hope you guys all have a great weekend. Thanks for tuning in with us and learning along. Thank you for sponsoring us to allow us to learn. This is an amazing ride.
Thanks a lot. Have a great weekend.